2 Player of the Year award. Lions in Buffalo tomorrow. Quarterback Matt Stafford says he will play despite officially being listed as questionable because of a back ailment. All for the Lions, among others, Bruce Ellington, Rick Wagner, Deshaun Hand, and Kerryon Johnson. 4 starters also missing for the Buffalo Bills. Michigan basketball at home today against Western Michigan, 2 p.m. You can hear it on AM 950 WWJ. Pistons host the Celtics tonight at 7, also on AM 950. Pistons losers of 6 straight might get back Reggie Bullock, who's been out for a while with a sprained ankle. And the Celtics are winners of 8 in a row. At the Ticket Update Desk, I'm Jeff Lesson. For more, 971theticket.com.
The following is a paid program. The views expressed on this program are not necessarily those of Entercom Communications, its sponsors, or affiliates.
Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed. Alongside of me, Harry Glantz.
Good morning, Harv. How you doing today?
Fantastic. Great to see you, Harry. December 15, 2018. This is our recap show here. This is it. 46th show of the year.
Do you believe that it's already December 15th, Harv?
I don't even know where the year went. Look who we bring in. Lee Ehlers, of course, the best.
What's up, America?
Remerica United and Novi and a whole lot more. Hey, Lee, welcome to the show, as always.
If you're watching on Facebook Live, okay, are you seeing what Lee's wearing today?
Standard garb for him.
It's unbelievable. Everybody has to turn. If you're I'm sorry if you're driving that you can't see this suit that he's wearing. He's awesome. He comes in. He's got all the spirit in the world, all the energy. He brought his father in, which is always cool to see a father and son hanging out together.
Well, thanks for the introduction, guys. Yeah, I mean,
and you're the man. Let's go.
It's a true story. I mean, I always look good. It really is how it goes. But today, I think I look a little extra.
Bro,
special.
you can never look as good as me, but that's the difference. So we don't want to go there. America does not want to go after that debate.
It's true. It'll be there forever.
We need usually Michael
by the
Buffer
way,
to announce
dad's
him.
better looking than you. I'm just saying that.
I can't argue. I really can't.
There you go. What are you going to say to that?
Well, hey, Gary, thanks for joining us. Gary told me in the lobby he's with Carrier forever. Heating and cooling, of course. Going to wrap up his career. Only 46 years with them, so hard-working spirit
Phenomenal.
here in Detroit.
It's great.
You know, that's what really Detroit's all about, is all these great hard-working people. We learned from our uncles and our fathers and whoever else guided you through the life. And again, we have that hard-working spirit, but we play hard and we also work very hard also, so that's a pretty cool thing.
Well, that's what this town's all about. You got to understand that. I mean, it's not the sexiest place, but it's the best place because the quality of life is real good. People are honest, hardworking, straightforward, and don't put up with any stuff.
Yeah, the women look good.
So that's why, and that's why we're called the Hardcore Mortgage Real Estate and Business Show, because we give it to you hardcore, we give it to you straight. You got a question, we'll answer it. If you're trying to bring some stuff in here that we don't like, we're going to tell you we don't like it, and people want that kind of advice. That's how we roll. That's just how it is.
Pretty straightforward.
Yeah.
Hey, we take your calls here live in the studio, 248-539-9797. Always brought to you by Capital Mortgage Funding at 1-800-LOW-RATE, the Mess Mortgage Banker. That's where you're going to find us all week long. I'm not going anywhere, so we're here all winter long, and December's been really busy. Typically, maybe a little bit more debt consolidation this time of year, but believe it or not, the purchases are really happening. Lee, you're sending me referrals. I know people are considering home buying. Some of them have to get their ducks in a row. We had a closing last week, and it's been fun and a pretty busy December.
Yeah, it's interesting because a lot of people always think the holidays slow down, people aren't buying houses, but what we had this year is a ton of buyers couldn't buy houses because they lost out on bidding wars. They got beat by cash offers, whatever it was. So now things are slowing down a teeny bit on the sell side, so these people can finally get in, they can actually win, they can actually get their offers accepted. So it's been gangbusters, it really has.
Yeah, if you sort of missed out on some things over this past summer, it was definitely nonstop, multi-bids on homes. You had to bring a lot of cash to the table. You needed some extra money. Now could be a little bit of a window of an opportunity before the spring, but we are forecasting in 2019, although the numbers are not forecasted to be as strong as 18 here, yet a very strong year.
Well, I'm going to come out with my official forecast. We do it every year. And why do I say it like that? It's no great shakes. I'm not a weatherman. I don't predict the weather because you're wrong 50% of the time. It's just going to be an outlook for 2019, and we're going to come back. When we come back after the first of the year, I already have it done, but I don't want to do it now. I want to start off the new year with something that we think is going to be a prelude to the entire year 2019. Because this is a recap show. Back in 2012 is when the market really started coming back. So we've had 7 years of a strong selling market. Normally cycles happen in 5-year cycles, maybe 6 if you're lucky. We've had 7 strong years. Now, question is, can it continue for an 8th year? Well, I've got my thoughts on it. I just pulled the data on it. I'm looking at it. I'm analyzing it, and I think that it's no great shakes. I mean, I'm going to be right down the middle with it, and it's going to be boring, and it's going to be vanilla, but it's going to be commonsensical, and that's just the way it's going to be. So you're going to see for 2019 a little different year than we've had from 2012 through 18, and that's for sure. And you're going to see some volatility in the market, like has been going on in the stock market the last 2 weeks.
Well, definitely we like things consistent and boring. Boring in real estate means that things are just moving along, humdrum. But that means things are not going up too much value-wise too fast, and things aren't dropping too quickly. Of course, uncertainty in the marketplace, especially in the stock marketplace. I mean, the country with trade negotiations, things with China, oil prices, always the volatility of Wall Street. One thing with home ownership, you can lock in for 30 years, and one of the basic needs of life is shelter, and that's something that you can definitely take care of. Things are still very inexpensive. We talk about Michigan being the 11th most affordable state in the United States. It's very affordable here. I mean, property taxes are low, and for a lot of bang for the buck. Last week we had one of the agents telling us, not only that, Harvey, how about the weather we get here? Although we have to go through a pretty tough winter, 3 or 4 months worth of it, but no major catastrophes. We don't have hurricanes and fires and all that other bad stuff.
Yeah, I mean, we have water everywhere, great hunting, great summers, boating. I mean, you have everything you want. You have it in Michigan for sure.
Listen, you're going to see on the news this winter, like we do every winter, you're going to see the news reporter typically at the airport in the snowstorm talking about flights being canceled. You're going to see that. Okay, you're going to see traffic jams and snowstorms on I-75 and accidents and people driving too fast in the middle of the winter, icy, snowy, and all that. You're going to see that. That's what we'd have. But you're also going to hear, like, how about yesterday? What a beautiful day it was yesterday.
Yeah,
sun was
fantastic.
out, 44 degrees. I mean, listen. It goes something like this. You live here, you're going to get 4 seasons. We want to joke about it. There's only winter and winter. No, that's not true. Here it's beautiful. You have the 4 seasons. The quality of life is very good. And the housing, the prices of housing relative to the country is very, very affordable.
Yeah, we're starting to see more and more leases that are coming up. And, of course, so many families took advantage. And individuals, corporations, they were buying up those rental properties, Lee. Anything on the marketplace over the last, as Harry said, 7-8 years, it's been pretty much bought up. And any of those inexpensive homes in the areas that typically get a lot of low to moderate income families in them, they're renting them. But those families, the rents are going up. They're done with it. The phones are starting to really move forward, where families took a look at their budget and said, you know what, this is ridiculous. I'm going to spend this kind of money on rent. Let me find out about home ownership and what's my next step.
Yeah, a lot of the renters that we deal with are really motivated right now, too, because they've been throwing money out the window with rent, and they want to make a change. And now that interest rates are about to go up, and they have been going up, now is the time to make that change. So they're really motivated. They're trying to get out there, and we have some inventory for them. So it's a really good time to make that jump.
Yeah, the inventory is up across the United States. I saw some numbers even yesterday here. We've got inventory increases here of about 5 to 10%, depending upon where you're at. Again, every city's a little bit different, but Denver's been rocking. California, the inventory's up. Florida, you are seeing inventory up across the United States.
Right. I'm going to put the fears to rest right now about interest rates. And I've got Lee's dad in here, and he can verify this because Lee's dad and I are probably in the same age range. I'm going to say range. Certainly not in your age range, Lee, okay?
It's all right.
But it goes like this. All right, right now, watch this. The rates were the highest they've been in 7 years. 7 years in October and November. Now, they've come back a little bit in December, okay? Now, the range of rates right now is around 5% for a 30-year fixed. Now, we're laughing because historically 5%. How about this? When we were buying our first house, rates were in the 17, 18, 15% range. So when people say, well, what's the Fed going to do this week? Well, the Fed shouldn't raise rates, but they're going to. Now, they shouldn't. There's no reason for them to, but they're going to because they've already said that they're going to.
Right.
So there's about a 60 to 70% chance that they're going to raise the Fed funds rate 0.25%. Okay, so what does that mean? That means maybe in January, February-ish, rates are going to stay in the 5.25 range. We laugh. Your father and I laugh at 5 and 5.25 at 5.5 because you know what? It's still low. So anybody out there that's driving in America that's listening to this, 5.5, are you kidding me? That's really low. It's so low that it shouldn't prohibit you from buying a house that you can afford. And the key words in that sentence is that you can afford.
Right.
Don't bite off more than you can chew. Contrary to popular belief, Lee, unlike the suit that you're wearing right now, you don't grow into a mortgage. Like when you're a kid, you can grow into a pair of pants and
Right.
buy them bigger. All right? No, a mortgage, you should be able to lie your head down on your pillow, take that fixed rate, forget about it, make the payment every month, you're good to go.
All right, the music says we're up against our first break. 248-539-9797. We come back. All your calls.
The next time you're in Vegas.
Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed, alongside me, Eric Lyons. I can almost hear you, Harry. There we go.
Hit that button. Hi, guys. I know I'm a rookie now. I'm glad to be back, Harb. Took off a couple of weeks, had a couple of weddings. You know how that works. And you're holding down the fort, doing a great job.
Meeting some people, shaking hands, spreading the good word.
Wishing everybody a Merry Christmas, Happy New Year, Happy Hanukkah, all that stuff. This is our second to last show of the year. Do you know that? We're on next week. Then we take off for the holiday.
And then we're going to
come back in the new year.
2019. Look what we bring in. Rosemary Ashley from Capital Mortgage. Hey, Rosemary.
Good morning, everybody. Glad to be here on this beautiful day.
Great to have you. We got tons of energy here. And you brought in your friend Flo Apke from Real Living Key Realty in St. Clair Shores. It's a great office. Hey, Flo, welcome to our show.
Thank you for having me. I appreciate it.
Flo,
do you realize, Harvey, in this studio right now, in the mortgage and real estate industry, we have over 135 years of mortgage and real estate experience.
Okay, you know he talks about us.
That's right.
Do you understand
that means we're all old, right?
Hey, you can say we're old or not. I'm just saying we're experienced. This is experienced stuff, and we learn new things every day.
Exactly.
The best thing about being in mortgages and real estate and investing is that there's always something new you can learn each and every day.
Yeah, Flo's the expert over there on the east side for sure, all up and down Lake St. Clair, Grosse Points, all of the Grosse Points, Shores, Woods, Village, Harperwood, St. Clair Shores, if I'm missing one, Harrison Township, all the way up and down that St. Clair County area, the St. Clair River, we should say.
Thank you. Yeah, I usually sell real estate out through Macomb County. Sometimes I'll even go out farther.
Oh, good.
If a client requests. I've been known to go out to China Township, St. Clair sometimes too.
Yeah.
And for the record, you've been doing this how many years?
I started full-time in 1987.
Beautiful. There you go.
I got my broker's license in 1992, so I've been full-time since
I'm going to
1987.
say it's like 32 or 30-something
long
years.
time,
Lots of information to share with you. Again, it's great to have you here.
Thank
We're
you.
going to be talking about buying and selling real estate. Of course, you can call Capital Mortgage all morning long at 1-800-LOW-RATE, the best mortgage banker. Get that strong approval letter. We always touch on the approval letters, negotiation. Flo, you bring a lot to the table, so we'll talk about some strategies even for buyers and sellers. And what do you see lately, Flo? As you know, the last couple months we've been talking about the shift. It's literally been since about the end of September.
Correct.
Where we feel it. We literally felt as if there was just, and the numbers show, less foot traffic, less showings on all your listings. What do you see is going on the east side, and how do you feel the trend's going to continue throughout the winter?
Well, during the last year, the rates have gone up a few times, which I think always affects the market and always takes a few people out of the game, or maybe has people thinking I should stay put for a little bit. Not necessarily really the case, because rates are really low right now still compared to when I was young. The first interest rate that I got when I bought my first house was 14%. And we were excited about that because they were higher than that. So 5-6% interest. It's not a high rate, and so it shouldn't worry anybody at all.
You know, I think that you bring up an excellent point. When you take a look at rates, rates are a long-term play. Okay, if you're going to buy a house and you're going to buy a house and be in it long-term, you have to look at historically what interest rates have done. And in the last 50 years, we're still at the extremely low end of the spectrum on mortgage interest rates. And I love it when Flo says, you know, when I bought my first house, I paid 14%. Yeah, well, rates were even higher than that in the late 70s, early 80s. And it's when I was at Michigan National Bank. But we saw rates continuously go down, and now people are so spoiled. Why are you going to let a situation where, okay, at this time last year, rates were in the high threes on a 30-year fixed. Okay, now they're in the mid to high fours. All right, I just want everybody to hear those numbers, 3s and 4s. And even if they're in the 5s and 6s, historically, that's still low. Now, yes, I realize
Texans, followed by the Cleveland Browns and the Denver Broncos. This special Saturday NFL doubleheader starts at 4 on CBS Sports Radio 1270.
Welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show. In our 19th year, would you believe it? Thanks to all the listeners. We want to thank our clients as we get into the 2019 right around the block. Thank all our great clients, borrowers, vendors, all the folks here at 97.1 also in the ticket. Great partners in real estate. Great guys like you, Lee. That's what makes it a lot of fun when you have some great real estate agent partners and the title companies, all the hardworking people.
Right. Thank everybody that calls in. Thank everybody, all the naysayers that
covered them all.
Around, right?
248-539-9797. Give us a call here. Join the show. We're going to go to Carl in Novi. Good morning, Carl. Thank you for calling in. Let me get my board guy to hit that one. There we go. There she goes. Carl, you're live on the ticket. Go ahead, sir.
Thank you for taking my call.
Thank you.
Good morning.
I got two questions for you. When we got married 15 years ago, my wife had a mortgage on a condo, and we have a very low $10,000 payoff on that. I was wondering if I could take out the equity in my house that I'm living in now to get that paid off, because it's 6.0.
Yeah. Yeah. What's your current rate on the mortgage, on the big mortgage?
It's 4.75.
What's your motivation for wanting to pay it off? It's only a $10,000 balance.
Well, I was just thinking to get that payment and get that, just taken care of. And also, we're thinking about, I'm getting ready to retire next year, and we're thinking about buying a condo in Tennessee. And I was wondering also if you guys can handle that transaction, or do I have to go through somebody else down there?
No, we're licensed in all 50 states. We can certainly do a transaction in Tennessee. We've got people that can handle that, and that's good. But I want to get back to the cash out to paying off a $10,000 balance.
Okay.
Right? There's an old adage that says the current value of your cash is worth more than the future value. So, I mean, I'm not going to stop you. If it makes you feel good and you want to lay your head down on your pillow at night and know that you don't have that debt anymore, that's fine. But do you have anything else to do with that $10,000 other than pay it off? And the reason I say that is, can you make more money? What's the interest rate on that $10,000?
He said 6.
It's at 6.
It's 6.0. Yeah.
All right. Well, I mean, that's if it makes you feel good to pay it off, there's certainly nothing wrong with taking $10,000 and paying it off.
Yeah, so what I tell everybody, for my clients, I get this question a lot, and I'm not the lender, I'm not the mortgage guy, but from a financial perspective, there's like the Dave Ramsey approach. You pay off everything with cash, you have it out of the way. But what I tell people is if you're going to take that $10,000 and you're invested in something that yields 10% or 20%, then do that other thing, because now you're making money. But if you're just going to sit on that cash and do nothing with it, and you're just losing 6%,
then pay it off.
Then pay it off. So
yeah, 6% is a good return. So what you're doing is you're in essence taking the $10,000, investing in 6%, you're paying it off. It's not a bad thought process. I just wanted to ask the question as to if there's anything else you're going to do with it. But I don't mind paying $10,000 off.
Hey, Carl.
Not going to kill you.
Carl, that 4 3/4 rate would probably go up a little bit again if you went to a 30. If there's a possibility that you said, hey, Harvey, if you reach out to me and said we would not only pay off that $10,000, but you're going to pull some additional money out to purchase that condo in Tennessee, now we're talking. That would be something I'd be interested. Either way, we're going to run the numbers for you. But I truly don't like the idea of you just getting a mortgage to add those two together. And the reason why is the closing costs involved are about $1,500 to $2,500. And at the end of the day, that's 10 to 20% of that $10,000 balance. I'd rather you just put that money towards paying that off directly, and then
another thing I'd like to. Well, my thinking was is we get that paid off, and then I want to see about refinancing my house we're living in now to a 15-year.
Okay,
that's strong. We like that.
There you go. Maybe we could add all these together, add the first and the second mortgage together, drop your term to a 15-year, and now we're talking a transaction that'll probably benefit you. Carl, it's a great call. There's so many families across Southeast Michigan. Thanks for calling, Carl. We'll get you back here. 248-539-9797. What is it? $783 billion across the United States in equity. Lee, families that bought homes 3 years ago, even 3, 4, 5, you go back 7 years, they're sitting on a bundle of equity right now.
They are, and what's super interesting about that call, by the way, is that you guys aren't here just to make money. You guys are actually helping people out, basically talking yourself out of cash in the situation because it's what's best for the client.
Right. Yeah, we're the worst mortgage guys in the world. We tell people not to have a mortgage. I mean, let's face it.
Which is great, which is perfect. And so everything we talk about, people can understand where it's coming from. It's coming from a place of knowledge, and it's coming from what's best for the client. So, it's everybody that's out there that's bought in the last 7 years in the swing is now sitting on cash. They have the money, and I get this question a lot. Well, should I sell now? And we have this money. Do I pull it out? What do I do? And it's, again, I'm not here to tell you what you and your family should do. But if that decision is made, then yes, you got to sell now. You're going to make the most money.
So, Lee, check this out. So I learned this yesterday, and I still, I'm that kind of guy that doesn't believe anything until I feel or smell my flesh burning. So if there's a fire and you tell me it's hot, I've got to stick my hand in it because I'm not going to believe you. So all these years, for some reason, and Harvey, you can interject in here as well, I always thought colonials, okay, either split levels or colonials or 2-story, 3-story homes were valued more
than ranches.
Yes. Okay,
right.
Always. Because who wouldn't want to have a colonial home? And there are more colonials being built now than ranches are being built. Although the aging population, me and your dad, we're not climbing steps anymore. Those days are over. We don't want to do that. So if you have a first-floor master, great. And I have a first-floor master, but I have a 2-story home. So it was best of both worlds when I bought it 26 years ago. So yesterday, we're rebutting an appraisal, which is what I do. And I was talking to my review appraiser, who I have a very, very good relationship. And if I'm going to believe anybody, I'm going to believe him and Mike Tomchek, okay, who was supposed to be on a show today. Tomchek, if you're listening, you call in, you could verify this. He tells me, and I'm rebutting I'm rebutting a colonial appraisal, and they used a ranch comp, and they're saying the ranches are worth more than the colonials. Mm-hmm. And I'm saying how can that be? That's contrary to everything in over 30 years in this business that I've ever heard. Are you aware of this at all? I mean, is that true?
Well, so what I'm seeing is demand-wise, absolutely. I mean, I have twice the buyers that want ranches, not just the population that doesn't want stairs, but also the population that wants that open floor plan. And that's what you're getting in that ranch-style house. And so, yeah, the demand is pushing it also with construction costs going up. It's so much more money building these ranches that the colonials they're not holding the value they once had.
Okay.
So I'm just telling you, I need Tomchek to tell me, I need you to tell me, I need 15 other people to tell me that that's true. Because, I mean, when you take a look at a ranch elevation versus a colonial elevation, okay, now a quad level, a bi-level, a tri, that's different because it's broken up a little bit. Right. I can see why they might not, and I'm using this in general terms so people don't kill me when I say this. I understand why they say those aren't comparable to a ranch or even to a colonial, for sure, in value.
Right.
But when you take a look at the elevation of a colonial home versus a ranch home, I don't get it. I mean, I need data. I need something. I need to smell my flesh.
It's real. It's real.
I need to feel it. And it's real.
And we've seen a lot of the builders actually, as they're building the ranch, they're trying to build enough square footage for the empty nesters, and they're doing the walkout. We see a lot of these walkout basements, the daylight window basements. So they are using the square footage here in Michigan. Well, generally speaking, we have a lot of opportunities to do basements, where in other states, of course, they can't dig a basement. So
I need an appraiser, an assessor, a builder. I need somebody to call in. You got to tell me why. My eyes tell me a different story.
Well, and then with the new construction, that's a big boom right now, and all these people are building up. I mean, I was shopping for my parents for the last 3 years, and we couldn't find a ranch that fit on the space that they have. And a lot of the stuff, when it's going to site condos, there's stuff in houses on smaller lots. So it's just really tough, and that's why I think it's just driving the value up of those ranches.
All right, let's talk a little bit about that too, Lee, of the empty nesters and moving forward. Sometimes you just can't find the property, and you have to look at modifying your home, which allows you to do some cash out refinances. Again, join the show if you want to. We definitely want to hear from you here. 248-539-9797. We're talking about mortgages and real estate and different things going on, what's going on here locally. And, of course, what's been going on locally and across the United States is strong employment, Lee. That's what's bringing all these buyers out. Families want to live here, like we said, they can get educated here. They definitely know that homes are affordable here. Perhaps the housing market remains in control here as the inventory definitely picks up. Homes have been appreciating. There's just so much going on here, but it really is tied into employment. Mm-hmm. And we see all of our friends and family, they're starting now to even make that next step up, Lee. They bought the first house, they were married, now they're having kids, and now they're trying to expand. Hey, whether it be colonial, whether it be a ranch house, we'll find the right house for you.
Absolutely.
Tons of information to share with you. Colonials. All right, we'll talk a little bit about that when we come back. 248-539-9797. We'll be right back.
Hi, Harry Glantz and Dan Burke for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Welcome back to the show, 9:17. Good morning to everyone out there. December 8, 2018. We got some sunny weather for the next 4 days. High today at 32. They say it's going to heat up tonight to 18. And then maybe a little bit of nicer weather throughout the week. This is home buying season, Flo. You'll tell everyone out there. We'll take all your calls here on the Hardcore Mortgage Show again. 248-539-9797.
So, Harvey, I love spirited conversation with Flo and you guys about interest rates, because interest rates really... right now, when people want to talk about interest rates, again, we're at the low end of the spectrum on interest rates, and people are worried that, how high are interest rates going to go? And we had a texter just text in and said, you should explain to people what happens when inflation hits and rates start going up and how that's going to decrease home prices. Well, it's simple economics, and what this person's trying to get out is they're saying that, interest rates are going to go up. Yes, interest rates could continuously go up. How soon, how fast, it's all speculation.
Correct.
Okay?
It always is.
I can promise you this, they're not going to be at 9 or 10% next year. Okay, so we know that. And even if inflation starts ramping up, that in and of itself, that in and of itself will not decrease home prices. What decreases home prices is supply and demand. The lack of people demanding housing, goes ahead and will decrease a home price. And this person's saying, well, if inflation goes up and rates go up, well, that'll decrease the demand, and that could be true. But you're talking about numbers that incrementally are very low numbers. We're not going to wake up tomorrow and interest rates are going to be at 10%. It's not going to happen. You're not going to wake up tomorrow and inflation's going to be out of control at 5, 6, 7%. It's not going to happen. Now, history will tell you, and this is the boring part, and that's why I like history, because it's history. In the late 70s and early 80s, inflation was running rampant, and that's why rates went up to 15, 18%. I'm here to tell you it's not going to happen, and we could see a decreasing cycle in rates in late 2020, because this economic cycle, you've seen the last 2 years, and you've seen the last 2 years have, I'm going to use a term from a previous Fed chairman, irrational exuberance the last 2 years.
And Mr. Greenspan, you're quoting.
That's right. And then the midterm election curbed that, and you're seeing where the stock market is going right now. And quite
Mike Valenti Signature Podcast. Get it on radio.com and Apple iTunes. 97.1
All right, and welcome back to the show, 9:30. Good morning. If you're just joining us, December 15, 2018. It's the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. Give us a call, 1-800-LOW-RATE, the best mortgage banker. Always here in the studio at 248-539-9797. This show, of course, we got Lee Ehlers in here from Remerica United. Lee's a great, great agent. And, Lee, it's been so much fun working with you a little bit this year. Again, we don't do everything together, but definitely you're Johnny on the spot. I know just working with the clients how much I've enjoyed the experience. We had a nice closing last week, and that's what makes it fun. The educated borrowers, really, putting people in the right direction. So, if you wanted to comment on that, I know your experience is just off the charts.
Yeah, well, the biggest thing I tell people is whenever the market's in flux, whether it's going up or shooting down, it's really important to have an agent that knows what the heck they're doing and has access to a full team. I mean, we've had a lot of people that I talk to, and they say, oh, we had the house of our dreams. It was all set up. Our agent was out of town, couldn't see it, we lost. And that's inexcusable, really it is, because you want to be diligent, you want to stay with them, that's great, but we have a team of showing agents. They can take you out at any time. They're going to get you in that house, and they're going to have the expertise of that neighborhood. So it's not just opening a door, it's also telling you what you need to know and what you don't know. Is there assessments, are there tax liens, are there anything out there that's going to hurt you when it comes to purchase? Hand in hand that with a lender who knows what they're doing and cares about you, and will absolutely give you good advice. It's something that you really can't put a price tag on, especially if you're a buyer and you're not even paying for any of it. The seller is. It's pretty awesome.
Yeah, it doesn't cost anything to hire a real estate agent. Again, on the buy side, on the seller side, of course, you're paying your listing agent and the commission on the sale of the house. But again, you can get qualified people out there. Always interview maybe one or two and find out. Referrals I think are always a fantastic way to start. But again, I think when you meet with people, their presentation, you can tell whether or not they've been in the game for a long time based on their knowledge and the information they're talking about. So often that we get families giving us a phone call and the house is still sitting there, Lee. And if your house is still sitting there, again, especially as good as things have been this past year, what are we typically looking at? What are these 2 or 3 things that are typically the problem?
Yeah, so what I say is, without even seeing the house, there's 3 things that are going on. Either A, the house is overpriced. That's the easiest one, right? It doesn't matter how sweet your house is if you're way overpriced, especially in the today's day and age where most people are shopping online. They're going to cap their search. They're not going to even see it. It's not going to show up. So it doesn't matter how pretty it is or what you've done. It just will not be in their queue. If it's not that, it's the house needs a ton of updates.
Okay.
Is your house, is it old? Or what happens a lot of times is people will say, I have this one item in my house that I updated, but everything else is old and nasty. Well, that just makes an eyesore. It doesn't do anything to your value. So that's option 2. Or option 3 is your agent just doesn't know what they're doing. They're not marketing that house. The story I always tell is the MLS is invented the Civil War. So it was a card catalog thing. It was a way for realtors to exchange information and show each other houses. So if they wanted to sell your house in Civil War, they'd put a sign in the yard, they'd put you in the MLS, and they would just pray somebody saw it, which is exactly how all new agents do it today. Nothing changed. So what you need to do is Facebook marketing. You have to get out there in social media. There's 100 different websites that those houses need to be thrown up on. I don't know which one that buyer is going to see, but that's why we put on all of them, and we advertise the hell out of it.
Yeah, you guys get a lot of exposure that way, and the internet's really the key. It's the exposure there. But at the end of the day, you got to get in the car and go look at the home because that changes everything. We can definitely really present a house nicely on the internet and social media by taking great pictures and videos, presenting that the product the right way. But at the end of the day, you get in your car and you find out what's going on in that neighborhood.
Yeah, I'm going to go with you, Lee, on that. I'm going to go with the first 2 reasons why. Let's say the third reason, agents don't know what they're doing. I'm not going to buy that a little bit. I'm not saying that there aren't, but I'm going to tell you that if in a market, if the house is priced too high, we know it's not going to sell. And if it needs updating and people just don't want to do the work or the remodeling or whatever, then that's usually what it is. And usually, bad word, usually it's people think the house is priced too high.
Yeah, I mean, everybody thinks their house is the greatest house on the planet, and they're thinking about all their memories when they price it. They're thinking about all the things they put into it and all the stuff that you don't see and all that.
All the emotional things. They're pricing with emotion rather than statistical data on what houses have sold for in their market.
Correct. And part of that third option, the thing that the realtor doesn't know what they're doing, is a lot of times a new agent or an agent that doesn't do a ton of business is scared to tell you what it's really worth because they're going to lose that deal, right? And so I've absolutely had people, the last 3 agents I talked to said my house is worth $300,000. Well, great. They're not going to sell it at $300,000. If they can, you should sign with them right now. Here's the pen. Do it because it's not selling there. But then they get stuck on the market for 3 months. They get frustrated. They pull it off. It's at a bad time. Just go down that list, right?
Yeah.
So it's really, really, really important that when you're doing the pricing, that you're really honest with yourself. You find an agent that's going to tell you the truth, even if you don't want to hear it, and you understand, make a decision.
All right, here's some interesting information. Last past November, last month, just 32% of the offers had written multiple offers on them. That's down from 77% from last year. So, yeah, it's definitely the market has shifted a little bit. Buyers have, I'm not going to say all the control. They don't. Go find a house you like. Go make a great offer. Be knowledgeable so that you can move forward in a professional way and make things happen for your family.
Sellers had all the control before.
Boy, did they.
Let's face it. It was a seller's market. I think going in, and, I'm not going to... I might ask Lee for his projections in the next segment, but it's not going to be that way in 2019. It's just not going to be that way. In certain instances, it might be on certain properties specific. In any market, of course, it's going to be that way. But generally speaking, it's not going to be a seller's market in 2019.
And if I could, real quick, this is something I'm super passionate about when it comes to the market, because everybody thinks the market means the entire country, the entire state, whatever it is. And I can't impress upon people enough that the state of Michigan has pockets, and these pockets don't sell the same way. So right now, if you're in Ann Arbor, you're still getting bidding wars. You're still getting people that are mass mobs going to open houses, all that. Other parts of the town aren't. Right. So it's very, and even there, you'd segment between price points. So if you're sub 200,000, absolutely, it's mob, million people, million offers, all that. If the house is nice, if you're in the 500 plus range, executive price point range, those houses are sitting.
Okay. And of course, downtown Plymouth, for example, a little bit different, same price range. In Canton, they're only a couple miles away. They're right there, but it's a different ball game. Like you said, different pockets.
Well, Harvey, look what you're doing in Corktown right now.
Yeah, bingo.
Look what you're doing in Corktown right now.
Right. All sorts of good things happen, of course, across even the city of Detroit. But there's different pockets, right? There's plenty of pockets in Detroit. They're extremely affordable. 2,000 square foot homes for 40 to 75,000 still. Whether or not you want to live there yet, that's your call. But other areas that are really being newly developed, of course, Corktown's one of them. We got the Midtown areas, and of course, all the different areas of Southeast Michigan. Don't want to leave any of them out. Hey, we'll take your calls all morning long. 248-539-9797. When you buy a house, you typically need like 6 factors. You need enough money to put down for the down payment.
Well, that would help. Your
closing costs, there's moving expenses, repairs, maintenance, some reserve monies. You got to understand this. What it takes to purchase a house, the funds to close involved, understanding sellers' concessions. All this stuff is the knowledge you need to move forward in a professional manner and keep the money in your pocket. Again, this isn't push a button and get a mortgage. That stuff doesn't happen anywhere. Yeah, you can push a button and we could download your documents. That's all that's going on here in the United States. Don't let the commercials fool you, folks. You must deal with mortgage professionals and get the knowledge behind you to make some great decisions. That's the key. 248-539-9797. Let me move off to Jeremy's calling in from Sterling Heights. And there we go. Jeremy, you're live on the ticket. Go ahead, sir.
Hi. I purchased a home in February of this year, and I was able to purchase it for well below the assessed value.
Good job.
And so I'm kind of already I bought it knowing that I would be moving. And so basically my question is, how long do I have to own a home before so that I can avoid the capital gains tax when I sell it?
Well, here, let me answer this question. If you sell the house, you're going to sell it. Give me an idea. Give me the numbers. You bought it for X, and you're going to sell it for how much? Again, because there are costs to sell a home. Your transfer tax, your title insurance. What are the numbers? Give me an idea of the numbers.
So it is assessed for $519, and I bought it for $300.
All right. Let me just say this to you. Is your neighborhood selling for $519? Or, I mean, the assessable and the appraised value is one thing. Are your homes similar to what you have? Obviously, you got a nice house. So you have 3,000 square feet plus, right?
Yep, 36.
Yeah, you got a big one over there. So the homes in your subdivision are selling for $500. How were you able to pick it up for $300?
I may have known the homeowner.
You may have known, right?
And he said to you, "Hey, because you know me, I'm going to let it go for $200,000 less. Give me a little bit more."
Or your relative wanted to get out of the house, right?
Yeah. He doesn't need. He didn't need it.
There you go.
Look, I'm going to answer the question this. You do need to consult your CPA. I believe it's a 2-year hold. If you're going to flip and make a big chunk of money, I believe it's a 2-year hold. But you got to, again, there's 1031 exchanges you can use. If you're not going to reinvest that money into another house, then you could run into some tax problems. So again, you're going to talk to your CPA about the 1031 exchange. If you're going to reinvest that money in another house, and if you did any improvements to the house, obviously you can write those off.
Write that off.
So that might be something that'll benefit you in the future.
Yeah.
But your CPA is going to definitely be getting a call.
And real quick, so this happens a lot with people. One thing to Harvey brought up a good point. The comps are more important than the appraisal or assessment that you get. Because a lot of times banks, they're looking at it as, if you walk away from this house right now, what can we resell it for? But they're impartial versus comps. That's what the buyers are going to see. So just make sure that that's where you need it to be before making a decision like this in listing.
Okay.
Good stuff, my man. Hey, wait, I'm going to hire you to find the next house for sure. This guy knows all the insides. But again, there are those opportunities, Lee. Every now and then a family will actually get an opportunity to buy a house from a family member. And yes, if you're smart and you want to divide the income, maybe the proceeds Sometimes it's from a death, a divorce. Sometimes there's bad things out there, and other siblings are going to get it. But a lot of times you can purchase a house from a family member and save a lot of money and do that. All right, the music says we're up against a break. When we come back, we got tons of information to show you. Would you believe that? That's no way is that true. 12.4% of people seeking mortgages were seeking them in Florida. Hey, 91% of the Michiganders applying for mortgages were getting loans right here in Michigan. All right, tons of information right when we come back.
Where's Bobby?
Hi, Harry Glantz and Dan Burke for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
All right, welcome back to the show, 9:31. Good morning if you're just getting up. Be safe out there. Roads are dry. Sun is shining. It's going to be a pretty weekend here, a little on the cold side. So listen to the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. 1-800-LOW-RATE, the best mortgage banker. That's where you call to get a real approval letter. And as we're at the break here, Flo Apke, professional real estate agent, only 32 years experience at St. Harvey. Let's get into this, talking about real approvals, setting people up for success. And there's no doubt, Flo, we talk about it all the time. Sometimes it's as simple as when you talk to a borrower, and they might even be shopping us or calling us around. And one of the questions I ask them, like, well, did you provide, if they tell me, Harvey, I've already got an approval letter, and I say, oh, good. Did you supply these documents, these specific documents? And the answer is no.
Or did they ask you as many questions as I did? Did they ask you, okay, how long have you been in your company? Okay, how long have you been doing overtime? Okay, how long have you been on commission? And, oh, what did you do before that? They're not asking the in-depth questions that can make or break a deal.
If your mortgage person is not asking all those questions, okay, and they're not making it easy for you, they're making it harder for you. If you think more questions is making it hard, exactly right. So what Flo really means is, Flo gets, here, let's go through the scenario. I hand Flo a pre-approval letter because I'm Flo's buyer. Flo looks at it and says, okay, it looks good. Flo just wants to make the call to the mortgage person or not and know that what's written on the paper is worth it. Okay, that's a real commitment, because she doesn't want to have to go back after the fact and explain to her seller that, well, it really didn't mean what it said on the paper. And we see that a lot. We get that call a lot.
And sellers are heartbroken when things go bad and there was a pre-approval. And that's what the first thing they'll say is, but they were pre-approved.
Well, so are the buyers, too.
Right.
So are the buyers. They go,
the buyers were pre-approved.
Right, and the buyers are heartbroken.
And the buyers are heartbroken. They've wasted money.
Yeah,
they've wasted money on an inspection, sometimes on an appraisal, and that's because nobody was thorough to begin with.
You got to be thorough. You got to ask those tougher questions.
Nobody asked the tough questions. Nobody made sure everything was in order. It always makes me feel bad when a buyer gets rejected well into the deal for something that happened 3 years ago that a good loan rep that was thorough would have caught way before.
Yeah, there's no doubt.
And oftentimes
reading the credit, reading the
Doesn't matter how slim the chances. It doesn't matter how many 100-yard rushers we have or don't have. 'Cause Lions gonna Lions. Game Day Uncensored starts tomorrow at 9 on 97.1 The Ticket.
I'm waking the Lions in me.
All righty, we're back. Always seems like a quick break. Good morning. If you're just waking up, it's the Hardcore Mortgage Real Estate Business Show. Again, brought to you by Capital Mortgage Funding. In our 19th season here on the air. How many years at Capital, Harry? 20
going on 27. Bro.
27 years at Capital Mortgage Funding, right here in your own backyard. Give us a call, 1-800-LOW-RATE, the best mortgage banker. Again, we got a whole staff of qualified people, the old people, I say professionals that have got a lot of experience. And I'll tell you, the experience can really pay off when you're purchasing a home. You got to deal with folks that really know what they're doing. 248-539-9797. Let's move off to a call. We've got Tim calling in from Heartland. Good morning, Tim, and welcome to our show. Hey, Tim, you there?
Can you hear us? Tim?
Heartland put you back on hold there, Tim, for a second. All right. There we go. We lost him. You guys got that? That's what happens sometimes. 248-539-9797. We definitely have some open lines, though. And 2018, what a big year for homeowners. There's no doubt about that. Home equity jumped 9.4%. Remember, in 2009, when 25% of the homes here, 25% of the homes in 2009 were underwater. That means they owed more money on their mortgage, their home equity loan, than the home was worth. Those days seem like they were a long time ago. Yeah. But you got to prepare for the future and make sure that this holiday season, Harry, we see so often families do get themselves in a little bit of trouble. Be careful with your spending, but consider a cash-out refinance to definitely pay off that toxic debt, those high interest rates.
Yeah, we came up with the term toxic debt a long time ago. There's debt and there's toxic debt. Toxic debt are credit cards, 18%, 19%, up to 24%. You know, if you go ahead and you take the equity out of your home and you want to pay that off, with a lower rate and with interest that can be deductible, you pay off the toxic debt credit card and you tear them up and you keep one card. Okay, keep one card and maybe a gas card, okay, if you need that. But if you keep one card, tear the other ones up, you won't get in trouble. But as we know, human behavior is what it is. Sometimes that cycle starts over again. But you can't do that. Don't use your house as a piggy bank.
Yeah,
you
definitely.
Can't keep doing that. It's not a cash register.
Right. Do it once. If you need to do it once, we'll show you the numbers. Do it once. Get back on your feet. All right, let's move off to some calls here. We got Roger in Madison Heights. Hey, Roger, welcome to 97.1 The Ticket, and go ahead with your call.
Yeah, I got a quick question for you. I plan on being a first-time buyer by the end of 2019.
Great.
And I was wondering if is there like any grants or anything like that I could get that would maybe pay for a down payment or a closing cost or anything like that?
Yeah, well, absolutely. Right now, there is through the state of Michigan. The MSHDA program is absolutely fantastic. There's two programs they have right now through the state of Michigan. The one is $7,500 for first-time home buyers. And again, if you haven't bought a house in the last 3 years, that deems you a first-time home buyer. And then there's some money left on the table. There's still about $8 to $9 million left with the state of Michigan. So maybe now, Raj, maybe we're not waiting till next year, or next year's in a couple weeks. $15,000 the state of Michigan has for you. They're in selected zip codes, and maybe one of those zip codes would match where you're looking to buy. Where are you looking to buy a house?
I'm looking like maybe the Clawson area.
Yeah, Clawson's been hot. I see you're calling from Madison Heights. Anything surrounding Royal Oak has been the new hot area. And, of course, you got Hazel Park, Clawson, Ferndale. All these areas have just taken off.
But there are income limits, and we'd have to get into that with you. But, you know, there are certain parameters that you would have to go by, and we certainly do those types of transactions. And, again, you know, 2019 is in 2 weeks, so.
Yeah, maybe we'll get you to become. Hey, Raj, curious, whenever someone calls talking about first-time buyers, how much do you pay in rent? That's always been a popular question I like to ask people.
Well, I pay $525.
Oh, that's really inexpensive. Have you saved any money? Again, that's a low payment, and you're looking in Clawson, so we know that most of the homes in Clawson are probably going to be $100,000 or more.
Well, there's a couple issues there. Number one, and that's why I said by the end of 2019,
oh, okay,
save some money. And number two, it's my credit is shot, and I know I could get an FHA loan with a low credit. So I don't know if that would make a difference or not. Or
yeah, but your credit might not be as bad as you think it is. Let us take a look at it, and then we could run you through, and we can do what we call a credit update or a quick credit fix on it for you. Well, yeah, and we do that. And don't hire anybody to do that. Don't pay somebody $500 that says they can fix your credit, because there's only two people that can fix your credit: you and you. Okay.
Yeah, those two.
That's it. Those only two people.
Is that going to hurt my credit to have people do that too, or?
No. When you say people, I mean you don't want people pulling your credit report multiple times.
That would hurt it.
Yeah, if we go ahead and pull your credit and we take a look at it and we advise you and counsel you as to what you need to pay off quicker than other things, that'll start build along with you making your payments on time over a period of time. That'll raise your credit score substantially.
Hey, Raj, we'll take a look at it for you for sure. It's a great call.
Yeah, and so what I tell all my people, too, at the same time is what Roger's doing is super smart, right? Like he's saying, I don't know, I want to make a decision, I want to come to the experts well before I pull the trigger. What people always do is, all right, I'm in the ship, I'm going, what should I do? Well, it's too late. You're already there. So well in advance, contact us. We'll help you out. It's all free. Get your credit squared away, get your, kind of your optics going, and get it all set up.
Yeah, don't be naive. Don't be intimidated. It's all free. Like you said, Lee, it really is free. You can sit down, you can make an appointment with us at Capital Mortgage, discuss all your options. We take a look at your credit, the funds you're going to be working with, sort of explain all the different mortgage programs that are out there. Most families do fit into one of the government categories, which is conventional, Fannie Mae, Freddie Mac, FHA, VA, USDA. Usually most families are going to fit within one of these parameters, and then you can learn from there. You can learn what it's going to take to buy a house, get in a car and find out what homes are available in your price range. Just continuously building that knowledge bank. I love the clients that really learn what they're doing.
Yeah.
They have a better experience, Lee, always. They have less pressure. They know the next steps because, Lee, as you know, so many things are happening within 30 days. Even the transaction we did. I mean, he's getting insurance. We had an inspection done. We had to do an escrow holdback. There's always a little something going on.
It's never perfect, ever. There's a city inspection people didn't know about. There's a problem people didn't know about. Stuff happens in the loan process. Everything that can happen. So it's really important that we talk through everything before. You get educated on the process. The biggest poison that you can have is everybody knows guy, and that guy is throughout real estate where, well, everybody knows that I can do this or I can't do that, blah, blah, blah. It's never true because everything's changing.
On every transaction.
Exactly.
Right?
Yeah.
There's a lot of moving parts, and you talk about city inspections. On these city inspections, when you call for them, they're not on your time; they're on their time. Yeah. All right, they're not scheduling because all of a sudden Lee Ehlers needs it done right now. You have to schedule them in advance.
Oh, well in advance. And when they say they'll come, they're going to give you a 3-hour block. And if they come in 10 minutes early because they're early and you're not there, they're not coming back. And they're not even telling you they were there. So I had an agent sit at a house for 3 hours just to be told when we called in the city, where's your guy? Oh, he was 10 minutes early, so just figured he'd pop by. You weren't there, so we left.
Oh, boy.
Boom.
Yeah, everybody knows guy and not a problem guy.
Exactly.
Right? Not a problem. Not a problem. No problem. No problem guy kills me, too.
Yeah, but it's always no problem guy's never the guy actually with blood in it in the deal. So that's why it's
right.
No problem.
Hey, don't worry about it. A couple cool things for 2019. Hey, the conforming loan limit went up, $484,350. It's, Harry, not so much because our jumbo loan rates are as good as our conforming loan rates, but there are some families that they broke their loans down in a first and second mortgage. They did the old combo loan. So if you are out there and you have a second mortgage, you have lots of equity in your house, and you were doing a combo loan with a second mortgage that has a higher rate, call us now because you can consolidate both of those, the first and the second mortgage, get a great new low interest rate. It's not like a cash out refinance. You're just doing a rate and term refinance where you're adding those two loans together.
Well, most oftentimes that second mortgage or that home equity loan, synonymous, they're on an adjustable rate.
Right.
So you want to fix that rate. You want to combine them and fix it and be done with it because you don't want to have to worry about part of your mortgage payment going up.
Yeah, and of course, usually those have a little bit higher interest rates, too. Lee, I know that we're going to run out of time here in a second. Before I go into that, before you say all your thank yous, second home leads, let's throw that out there. Investment homes, great opportunities. We talked about it. Families with opportunities. If you have kids in college, give us a call because definitely great opportunities, even if you want to buy near Schoolcraft College, for example.
Yeah, I have a lot of investors right now that they don't know where to put their money. So, the stock market's kind of up and down. The other investments aren't really yielding any returns. Oil is not where they thought it would be. So the only thing that's recession-proof 100 times over is rentals. So they put their money in the rental, whether it's a kid in college or whether it's just kind of investment space. But you get in, you have passive income, and there's always going to be renters. Always. So, especially at that price point. So, and you're going to make a ton of money, and it's going to depreciate and appreciate, so you win on both sides.
All right. Always want to say thank you to all our listeners out there. That music says it's the end of 2018 for the Hardcore Mortgage Show. You can find us at Capital Mortgage all year long. We're still working every single day.
Merry Christmas, Happy New Year, Happy Holidays to everybody. Be safe, be healthy, be happy.
Yeah, if you need a mortgage, you need a real estate agent, definitely give us a call. Lee Ehlers is a great agent. Remerica United, give us a call. Capital Mortgage, get that approval letter first, and we'll hook you up with Lee and all these great agents that we work with. We got Pat Caputo coming up with sports. Again, a Happy New Year to all the listeners out there. Keep it here on 97.1
Thank
Ticket.
you, everybody.
See you guys soon.
97.1 The Ticket.
Hi, Harry Glantz and Dan Burke for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.